Welcome to Super Seller Sunday. Today, we are excited to be able to have an accountant with us. Colby Woods is joining us today. Colby, welcome to our show.
Well, thank you. I'm so happy to be here. It's kind of weird not watching these, but actually being on one. Do I watch myself or?
Yep, you're going to watch yourself after this. Can you tell us a little bit about yourself?
Yeah, so like Lisa said, my name's Colby. I'm an accountant and a tax preparer, and I'm here today to answer your questions from Lisa's poll in the group last week. So on the side, since this is a marketplace group, I've been selling for forever, it feels like, on Marketplace, at the very least ever since they started shipping, and maybe even since the platform started on Facebook. I'm one of those people that started out in the groups, so the original place to sell things on Facebook. I mainly sell gently used clothing, shoes, and accessories.
So you're like one of the original gangsters, huh?
Yeah, sure. Before we get too far, I just want to preface the video with a few things that are important for you and the viewers to understand.
Sure.
Just know that I'm not a CPA, and this should not be considered official tax advice in any way. What exactly does that mean? You're telling me about taxes. Is that not tax advice? Well, what I mean by that is that you and I are not in any kind of client-accountant relationship. Therefore, it's important to note that I'm not giving you personal tax advice that you should rely on to make any kind of tax decisions or business decisions. That's really what I mean by that. What you should do, however, with this information is take some of the things I share with you today or that you see through the links and consult your own personal tax advisor, CPA, etc., about these ideas and if they apply to you and your business. Since it's not tax advice, you're going to see that there are a few questions that I don't directly answer. This is not because I don't want to or I'm being difficult, trust me, but it's because they're situationally dependent and I don't want to be misleading in any way. So just please give me grace on this, as I'm trying to give you guys as much information as I can, but protect myself as well. So I just wanted to put that out there before we get too far.
That's perfect. That's like the most perfect disclaimer I've heard in so long. Let's start with some of the questions that the people of our group had. They actually had quite a few, and the questions were really good, I thought. What are the major deductions that you track, and what are some deductions people might forget about?
Really good question. So in terms of major deductions, you should be tracking anything that you spend money on in your business. That includes cost of goods sold, mileage, shipping supplies, etc. Just anything that you're spending money on in your business. As far as some deductions that people might forget about, I would say a percentage of your cell phone bill. So you're using your cell phone to go in and message different people for your marketplace business or your eBay business, whatever platform that you're selling on, you're utilizing your phone for that. So a portion of that, as well as the same concept, applies to your internet. Home office in some cases, that is something you'll want to talk to your tax advisor about, because there are some complex rules regarding that as to what constitutes a home office. So just talk with your tax professional on that. Any mileage, you'll want to track that as well. If you're a full-time reseller, I would also check with your tax advisor about whether you can deduct a portion of your health insurance premiums that you pay as an adjustment to your income. So that's one that I think is maybe often missed, but will usually only work if you're full-time. So just keep that in mind. Another thing to look at is to just really pull up the basic Schedule C tax form. I would venture to say most of you will be filing in that way. So just see what kind of expenses are categorized on the face of that form and familiarize yourself with the types of deductions available. That's straight from the IRS themselves. All these things you'll want to discuss with your tax advisor, of course, to see if those deductions are something that you and your specific tax situation could take advantage of.
Wow, that's really good. Oh, all right. Let's go to the next question. I'm super impressed already. I'm sure everybody else is. We've got a whole slew of questions, so I hope you're ready to keep going.
Yo, I'm ready.
What is the best way to take off inventory purchases expense?
Yes, and as I was actually reading through the comments, I saw that this was a common question. I'm definitely glad to address this because it is very ambiguous. This is really dependent on your individual business and how you choose to deal with it, because it can be different for each business. That's something, again, you're going to need to check with your tax advisor on. If you're filing a Schedule C business, I would highly recommend checking out the IRS Schedule C instructions, as your alternatives for how you treat inventory are laid out pretty clearly in those instructions under section or part 3, cost of goods sold. An additional resource that I would recommend checking out is the video on this very subject. I'll ask Lisa to put that somewhere, whether that's in the video description, the comments, something, so that you have access to that.
Yes, I'll put that in the description. That's great. Absolutely.
Awesome. Well, this video, it really does a great job of describing the options. If it's not clear to you from reading the excerpt from the Schedule C, because sometimes the IRS details are not always as clear, even to tax preparers themselves.
Are you sure? Because when I read the IRS stuff, it looks really clear to me.
Well, you are the exception.
I'm not the exception. It's crazy. I don't even know how you guys can understand it. Please keep going.
But yeah, what I would suggest is then you just take what you learn from that video and the Schedule C instructions, discuss it with your tax advisor, see what's the best options for you and your business ultimately. I hope that answered that question.
It does.
Maybe that will make it a little bit more clear for some people.
Okay, next question. Do we have to pay taxes on the items that we bought for personal use and then resold for less? And how much can you legally write off in personal sales?
This is another situationally dependent question. So it's another one that I'm going to defer that you consult your tax advisor for guidance. There's a variety of ways to handle it. And in general, keeping personal items personal and inventory for the business is always the cleanest way to do things. But I understand that that isn't always possible. So that's something you really just need to consult with your tax advisor on, as well as how much you can legally write off on personal sales. That's, again, going to be situationally dependent. So just check with your tax advisor. They'll be able to help you through that fairly easily.
Okay. So if we bought something that we've had for years, and then we come back and we're like, I don't want this anymore, and we sell it for less than what we purchased it for, is that something that you can use as a write-off? Or what you're saying is it's totally depending on your situation. Is that right?
It really depends on the situation. They're going to look at it a variety of ways depending upon, was it ever originally recorded? If so, that could be treated differently than if it wasn't recorded. What kind of records do you have on it? If nothing, then it's a lot of situationally dependent stuff. So I would just say track it and then discuss with your tax advisor.
So far what you're saying is records.
Yeah, that's the big thing.
Best tax practices for multi-account sellers.
Oh boy. Well, I'm going to reiterate the records thing again, maybe in a little bit different way, but just make sure you keep track of everything, keep good records, and stay organized. If you come in with your books in order, not only will your accountant love you, I promise, but they're in a better position to help make sure you're not missing out on any deductions. So if you're selling across multiple platforms, it's especially important to stay organized, because if you do sell across multiple platforms, you know it can get hectic really quickly. Just stay up on your record keeping. Try not to get behind. That's really a best practice. It's really hard to remember stuff at the end of the year. So if you can keep track of it, write it down now, that'll be better for you in the end.
So what do you don't like shoe boxes full of receipts?
No, I've also gotten Dylan's bags full of receipts. That's not ideal either.
Dylan's, is that a grocery store?
Yeah, Kroger bags. It's not super fun, and ultimately it's going to cost you in tax fees as well. So
that's actually a good point. I'm sorry, I didn't mean to interrupt you. Keep going.
Oh, no, you're fine. But kind of back on that train, I personally think that getting a software, if you feel that you need it at this point in your business to track everything income and expense wise, is probably a good option. If you're small enough, maybe you can still continue to do it just off of like Excel or something. But if you're getting to where it's too much to manage, then I would recommend getting an accounting software. QuickBooks, I think, is one of the easier ones to work with, especially for people who are not super familiar with how bookkeeping really works. And there's a lot of resources for QuickBooks out there, especially like the online version. That's super easy. If you want to track sales like at the platform level, another cool thing about QuickBooks is that you can actually separate transactions by what are called classes, and you can track your sales and expense by platform at the detailed level. Just make sure you're writing down, keeping track of everything, even if you don't know if it's deductible or not, because your accountant's going to be able to tell you either way. And worst case scenario, you've just written down a few things that maybe are not deductible. You'll go back and talk to them and learn later that, don't be tracking these kinds of things anymore. You're ultimately just going to make it better for yourself and them. You're both learning.
Yeah, I actually agree with you on that. And coming from a non-tax person, but somebody who's been self-employed almost my entire life, I seriously had like maybe 2 years off where I actually worked for somebody. QuickBooks was everything to me. And then this last year, I just used a spreadsheet only. I miss QuickBooks. How do you account for listing and selling fees?
Typically, listing and selling fees, it's actually fairly straightforward, which you don't find a lot of those. But listing and selling fees are typically just an expense.
Okay, probably kind of already asked this, but I'm going to ask it anyway. What is the best app or software method to keep track of items for tax purposes?
I don't know that there's necessarily a best. It's just kind of whatever fits with you and your business. But as I mentioned before, just kind of going back on the QuickBooks train, I'm a big fan of QuickBooks for bookkeeping just because that's what I typically use most often. But there are many software packages out there for you to choose from. So you just need to research on what your needs are and decide what is best for you and your business. This is also something that your tax advisor can help you determine if you're not sure. I would also recommend finding a mileage tracking app to keep your mileage logged. If you have QuickBooks, I think there may even be an app that interfaces with a software to keep track of that kind of thing. There are also several available on the App Store where you can do it all from your phone, like Mileage IQ. So there's really a lot out there. Just a simple Google search will kind of tell you a lot of the different options. And then, as I said, you can always talk to your tax advisor and they'll be able to help you.
I totally tried to use my Google Maps to see if I could track my mileage that way. Yeah, that was a total fail.
Well, at least you tried.
So the next question is, what do I do with things that need to be written off over time?
Yeah, so that's a good question. What this question is referring to is items that are what we call capitalizable. Capitalizing is exactly that, what you described, writing off an expense over time through what is called depreciation rather than just expensing it right then. Most people, I would say, have heard of depreciation, but not necessarily what it means. So as a business, you should have an established capitalization policy, and you can check with your tax advisor on this to see what that threshold is for your business. But typically we see anywhere from like 500 to 2,500. Your capitalization policy is per item. So it dictates what purchases can be expensed versus what must be capitalized and depreciated expense, like you said, over time. An example, say my capitalization policy was $500, but I bought a brand new camera for $1,000. Most likely that camera would have to be capitalized and depreciated, expensed over time, as opposed to being fully expensed in that year as just an equipment expense. So just ask your tax advisor, like I said, what that threshold is for your business, and ask them how they would like you to categorize the purchases so that it's easier at tax time from a bookkeeping perspective.
So when you're saying that, do you mean like what did you call it? A capitalization policy?
Yes.
Okay. So do you mean by capitalization policy, like, I guess I don't totally understand what a capitalization policy is.
Yeah. So it's a tax election that you file with the IRS, and you just basically say anything over this dollar threshold that I set up to $2,500, I am saying that I will consistently capitalize an item over this threshold every time.
And then anything it depreciates over the years?
Yes, it depreciates over what's called its useful life. If that's a piece of machinery, that could be 7 years. If it's improvements to a property, it could be 15 years, etc.
So it just depends on what it is, and then they give you the total amount that's allowable for that item?
Yes.
Okay, that's interesting. I didn't know that. That's really good to know.
And typically an accountant will maintain that on what's called a depreciation schedule. So if you find that an item is over your capitalization policy, they'll take it out of expense and put it on this depreciation schedule, and then they'll calculate the depreciation over the useful life of the asset. That's typically how it works.
Okay, that's actually really good information. Thank you. Is it better to take a tax deduction from donating your old stuff rather than selling it and coming up with a cost basis?
That's another situationally dependent answer, and that will depend on your own personal tax situation. So that's another one I'm going to have to defer to you consulting your tax advisor. they'll be able to help you through that. But one thing to keep in mind with this is the size of the standard deduction. That was increased greatly with the Tax Cuts and Jobs Act of 2018. So that will affect your ability to deduct those donations if you don't have enough other qualifying deductions to get you up to that threshold. If you're a married individual, I think it's like it's close to 25,000 now.
Okay.
Before that's the threshold for being able to itemize. So your charitable deductions would be considered part of itemizing.
So what would be included on a spreadsheet handed to a CPA for someone with a Facebook shop?
Just make sure you're tracking everything you can. If that's through a spreadsheet, a bookkeeping software, whatever method it is that you're using, just make sure that you're diligent in tracking everything. One of the best things you can do is just keep up with it and keep it organized. You would obviously want to have if we're talking about a spreadsheet, you would obviously want to have all your income, expenses, cost of goods sold, mileage, and any other things that you think could be deductible. Try to have that to your tax professional as early in the year as you can, so that they have adequate time to process it and then ask questions. Reach out to them during the year, of course, if you have any questions about how to handle something, as it'll probably save them time later and maybe even use some money on fees, since you're not going in on April 15th and expecting a return to be done that is in disastrous shape.
You're not? I thought that's what we all did.
We don't like those clients.
I'm sorry, I'm trying to be nice to you right now, but it is the 15th and I'd like to go to my pizza party, right? Okay. Haley says, just literally everything.
Oh boy. That's a loaded question there for sure.
Amy, I totally respect your question. That's why I'm including it.
Well, I totally get what you mean, Haley. If it's your first year of selling, it can be very overwhelming. So I truly believe the best thing you can do for your business is to have a trusted accountant. And I promise I'm not saying that just because I'm an accountant. I kind of compare it to having a doctor, but it's a doctor, for your business. You want to have somebody there that you can go to if you're having issues, problems, need advice, consultation, that kind of a thing. If you have a good accountant, they're going to help you navigate through any issues that you're having, can be there to answer questions, like I said, and will more than likely have really great insight to help you make informed financial decisions. More than anything, they should be your trusted business advisor that's helping you and your business stay on the right track. If you start off with a good business advisor, it's less likely you're going to run into trouble in the future. Getting started off on the right foot can be one of your biggest advantages, because I've seen it the opposite way, and cleaning it up is much more difficult than just starting off on the right path to begin with.
Let me ask you a quick question. The cost of your accountant, is that a tax write-off? Is that considered an expense?
Yeah. So typically what they'll do is, if you have like a Schedule C business, they may bill a portion of the work. They may split out the work to where they say, for preparing your tax return, this much went into preparing your Schedule C business return, and the rest of it is personal. So obviously the personal piece is not going to be a tax write-off. It was in the past, but that was under old tax law. But the business piece, anything that they're doing for your business, then that's going to be part of your deductions at year end.
Boom, drop the mic. There you go. Hire a tax professional, right? They're not free to you, but almost. Pay the tax professional or pay, what is it?
The IRS?
Whatever that turbo tax.
Turbo tax, yeah.
Yeah, get somebody who knows what they're talking about. I'm totally blown away by your knowledge at the moment. All right, any considerations if we also do other work through like DoorDash, bartending, dog walking, those type of other gigs?
A lot of people have a lot of things going on, so this is actually fairly common. If you have multiple businesses like that, just make sure you're keeping good records for each of those businesses. I always start out with that, but it's really important. QuickBooks, if we get back to QuickBooks, it also has the ability to track multiple income streams through those classes, like I mentioned earlier. So I would recommend looking to that option if you have everything going into the same bank account for your business, and that's like synced to QuickBooks to where you can categorize the transactions by different business and class. It also has the ability to run multiple businesses out of one account. So that could be based on your subscription or a variety of different things, but I believe that's possible as well. Overall, I guess the point is just make sure your accounting software can handle the separate businesses and separate the expenses for those businesses, because it's really likely that your accountant will not just report them all on the same schedule, but they'll report them as separate businesses, separate schedules on your tax return. So just being able to identify expenses by operation is important as well.
Is it more beneficial to have all these organizations separate and on separate Schedule Cs rather than just clumping them all in as one business?
Yeah, typically if it's a Schedule C, you see it separated by activity.
Okay.
So they consider them separate businesses for the most part. If you get into other types of entities, that can be different, but most of the time we see them separated out.
You can show a loss on one, but the other one's making money. They don't necessarily cancel each other out?
It depends.
Okay.
That's all I'll have to say about that.
It depends on your personal income and how everything works and all of your situation. All right.
It depends on the entity type.
Any questions you recommend we ask someone new that we are considering to help us with our taxes? So like, how would you interview a tax accountant to know which one is the right fit for you?
Make sure that you get to know the person and the firm that they work for. Make sure they're a good fit for you and your needs. Make sure that it's someone that you're comfortable going to and asking questions if you need help. Make sure they feel like a trusted advisor for you and your business. An accountant shouldn't be someone that you just go to at year end at tax. You should be interacting with them as you need help throughout the year. So just on your side, also make sure you give them a full rundown of what it is that you have going on and all your different income sources, as well as what your long-term goals are. Just make sure it's a good fit both ways. I think that's really important.
So just kind of like a health fitness coach or a doctor, or it's your financial health. So instead of your physical health, we're talking about your financial health, which can in turn affect your physical health if your financial health is not great.
If it gets out of control, maybe so.
That's right. All right. Our last question is, do you have any other things that maybe you could mention that maybe weren't asked in the questions above for our group members?
One of the best things I would say for you and your business is to get an individual bank account for your business. Almost any bank or credit union, you can set up a business bank account through them. It really gets a lot more complicated later if you're going back and categorizing transactions if they're across multiple accounts, like a business account, a personal account, etc. So just keeping everything all in one place will really help with your record keeping, and it'll definitely help out your accountant when they're trying to go back and reconcile all those income and expense items at tax time.
We are all going to be hiring tax accountants soon. I can see that already. Keep going. Don't stop. Keep it going. I know you got a few more things to say.
Yeah. Another big thing I would say is sales tax. Most platforms you'll see at the end of your order, they'll collect the sales tax for you on transactions, but you need to individually be aware of the thresholds in your state that you're selling in what states you have economic nexus. So that would mean filing a sales tax return. This is a really great topic to, again, discuss with your tax advisor. I have a really helpful link from Alivera.com that will kind of show you detail by each state. So you can then take that, glance at it, and then when you have the next meeting with your tax advisor, that'll be a great starting point for discussions on, do I need to file sales tax? What do I need to be aware of?
That's actually really good. And I'm glad you mentioned that, because about a month and a half ago, I had an interview with one of the representatives at TaxJar, and we did a full video on, the thresholds, what it is that you needed, why you still had to report your sales tax, even though, the different platforms already sent them in for and behalf of us. And it's actually really informative. I'll definitely put both of those links up there so that everyone can really digest that information and decide what's best for them.
Well, that's great that you're already on that. I did not see that video. So yeah, definitely check that out for sure, as well as the Alivera link.
Absolutely.
third thing that I would mention would be SBA business mentoring. This is a resource that is volunteer staffed by business experts such as accountants. Some of the people at my firm actually volunteer as SBA business mentors. So that's how I know about this program. It can be utilized by any business owners who need help in general or just have questions about the process, no matter where you are at in the process. So I'll include a link with that in the others, but just really check out that website and all the resources for small business owners that are on the SBA website to see if there are any services that could benefit you beyond that.
When I first started our very first business, like over 20 years ago, was a furniture repair and restoration company. We went straight to SBA for help. Can't remember what the organization was called. It was SCORE. That's right. That's what it was. And they were so great to work with. I actually went in, they gave me a booklet. I sat down with them and we went over everything. They taught me so much about business, about how to make business plans, how to prepare for things. It was phenomenal. So I'm so glad that you mentioned that.
Yeah, it's a really good program for sure. The other thing this is one of the things I probably beat like a dead horse, but make sure that you have a good relationship with your accountant or your tax advisor. Make sure you have someone to go to if you have questions and that you're taken care of. Your relationship with that person should leave you feeling comfortable to go to them with anything that comes up. Just really make sure that you're good in that area.
We're all going to be sending you thank you notes at the end of this year because we all hired a tax accountant just to make sure that our financial health is good. That's so awesome.
I'd love to hear
it. You could just paste your wall up with thank you notes from all of us.
And then one final thing, and then you can stop listening to me.
No, we don't want to now. It's too good.
The final thing I want to mention is a resource called VITA. This is Volunteer Income Tax Assistance. That's what it stands for. It's a program that's actually funded by the IRS and run by the IRS. It provides free individual income tax preparation to low-income individuals at absolutely no charge. It's 100% staffed by volunteers, so no one gets paid to prepare the tax returns. They're all doing it out of their own free will and desire to help everybody in their community. This is not something that most resellers would be able to take advantage of because VITA is limited on the scope of returns that they can prepare for free. And most Schedule C businesses and more complicated things like that are not in scope, unfortunately. Why I'm mentioning this, I'm a volunteer in the program and I find that a lot of people don't know about it at all. I'm extremely passionate about making sure everyone who needs tax help, especially the elderly and low-income individuals, have access to it. So certainly all of you watching this have friends, family members, or community members that might be able to utilize this service and could really use the free tax preparation. So with tax season approaching, if you know of someone who could benefit from this service, please let them know that it's a program that exists. I'll have another link that is the VITA site locator that can show you sites nearby in your area if you put in your zip code. If you have time and would like to volunteer, I'd be more than happy to help direct you to someone who can put you in touch with a site in your area. You can still volunteer and not have to touch a tax return. That's something that's deterring you from potentially doing that. We always need greeters to check taxpayers into their appointments. All you have to do is man the desk, check them off as they come into their appointment, have them sit down and fill out some paperwork, and then the tax preparers do the rest. You don't have to do anything tax related. That's great volunteer opportunity.
Yeah, a really great one and a good way to network sometimes too with everyone, the tax accountants and the people who come in the door. That's really good. I'm excited. Yay!
I just want to say I really appreciate each one of you that has spent this time and watched this whole video on taxes. Right. I hope you really learned something from this video.
You made it interesting though.
Well, thanks. Thank you so much, Lisa, for inviting me to help with Super Seller Sunday. I'm honestly honored. And good luck to everyone with December sales.
Before I let you go, how can people get a hold of you if they want to be able to get a hold of you?
Just send me a message on Facebook.
Okay, so in the group, look for Colby Woods and send you a message.
Yeah.
You're awesome. Thank you so much. You have a great night.